Thursday. And I'm going to say happy Thursday because it's an Easter weekend like we've never seen before, right? So since the last time we would have met on this platform, it would have been Tuesday night. We've received another announcement from our Prime Minister, and we are going to be having extended curfew periods throughout the Easter weekend, which, you know, we can imagine certainly is not only surprising, but perhaps disappointing. But nevertheless, folks, JMMB, we're still here for you. We're still here. We're still doing JMMB Goal Getter live streams, and we are happy to be here again with you tonight. Everybody's on the curfew, and we're going to have another awesome discussion. My name is Carrie Ann Stimpson, and I am the Group Chief Marketing Officer, aka the CMO at JMMB Group. And I'm happy to welcome you all here. I'm seeing everybody coming up. Raquel, Derval, Tanika, safety first. That's right, Raquel. We're doing what we have to do as a country, and JMMB stands with Jamaica as we do what we need to do to minimize the impact of COVID-19. And it's a difficult time. Our economy has already begun to take a hit. Individual Jamaicans and Jamaican businesses have unfortunately continued to take a hit. And that's why we're here. We're here to provide the kind of information that we believe you need to get through this time and to come out of COVID perhaps even stronger than when we started. So we believe in possibility thinking, and that's why we are here. Good night, everybody. Good night, Lisi. Good night, Nicole. Love it. Hi, Vivine. How are things in St. Anne? Good to see you. Thanks for logging back on. If you are a regular viewer on these lives, welcome back. If you're new to the family, hey, Jilly J. Hi. If you are new, welcome. Happy to have you. So let's jump right into it, right? So we have a very interesting panel of gentlemen here with us tonight, right? To a lot of you, especially in the Twitter world, they are no stranger because, you know, they tweet quite a bit, right, to say the least. Some of you may know them as three persons who are part of a general type of conversation that occurs under the hashtag Finance Twitter JA. But the reality is that they are individual people in their own right. But the one thread that binds them together, and certainly we agree, is they are passionate about financial education. And JMMB is passionate about financial education. And we are happy to have them here tonight to have a conversation about their own personal money management philosophies and strategies. And I just want to highlight that they are not licensed financial advisors, folks. No, they're not. And so, as you see in our ticker under the screen, we are not offering financial advice on this live stream. I'm so sorry. If that's the broadcast you came for, I'm sorry, this is not it. We are simply here to have an open discussion about these gentlemen and their personal financial and money management and investing philosophies and strategies and what works for them. As usual, JMMB, we encourage everyone when they're looking to invest and to manage their money. What do you need to do? You need to speak to a licensed financial advisor. We have a lot of them at JMMB. There are a lot of licensed financial advisors across Jamaica and all the regulated entities. Please speak to them when it's time to invest and plan your financial future. So just a general conversation here tonight, folks, just making sure that everybody is clear on that point. We've called it Personal Money Perspectives, and we are happy to have you. So let's get into it. Good night, everybody. David, Rose, Jenna, love it. Randre, love it. Renzi, hi, Renzi. Hi, Nasheen, Doneth, love it. Welcome, everybody. Welcome. So let's get into it. Let's introduce our gentlemen. So first up, I'm going to introduce Mr. Marc Gayle. So everybody's at home, guys. Mark is at home. The children are safely locked away. And wifey is tending to them, I'm sure. So Mark, welcome.
Thank you for having me, Carrie. Hi, guys.
Thanks, Mark. So Mark, just tell us what you do and why are you passionate about personal financial education?
Yeah, so I run a company called TCP Tings. We make Jamaican greeting cards, gift tags, and other items. And why I'm passionate about financial education is that I genuinely believe that it is the surest way to economic independence for everybody. I'm a huge proponent of what the government has been doing, or the last three successive administrations have been doing to kind of stabilize the ship, and more particularly in the last 3 or 4 years. One of the messages they have been pushing is one of economic independence for the country, but then also, I believe, for the citizens also, and so I think that and it becomes increasingly clear during times of crisis why we need economic independence. So, to me, financial literacy, financial education it goes hand in hand with that. So yeah, that's why I'm very passionate about it.
Thank you, Mark. Thank you. And we appreciate your passion and your desire to stand for the greatness of Jamaica. That's certainly something that JMMB believes in as well. See everybody saying hi, Mark. From me, I see all the Twitter peeps coming in, Mandy. I love it. Raquel from Facebook. Raquel saying, hi, Mark. Welcome. The next person I'm going to introduce, he is actually a particular part of the JMMB family because he is a team member. He works for JMMB, so he's my co-team member at JMMB. He is Mr. Simon Johnson. Hey, Simon. What up? What up?
Hi. Good night, guys. Boy, my apologies for the beard and everything.
Hush.
I'm trying to grow a beard.
Hush, never mind. We know your advice anyway, so beard or not.
My name is Simon Johnson. I am a senior capital markets analyst at JMMB in the capital markets unit. I mean, basically what we do is we raise money for businesses in different ways, whether it be debt or equity. I mean, if you know anything about me, you know that I'm passionate about financial literacy and financial education. I've learned so much over the past couple of years, over a relatively short period of time, and I just want to share that with everybody. I just want to ensure that everybody learns and understands what I understand thus far, and we can all grow going forward together.
Thank you, Simon. We really appreciate that. And again, acknowledging your passion for financial education and educating all Jamaicans about how to better manage their personal finances. We appreciate that passion. And last but by no means least, and I said I wouldn't be discussing marital status on the broadcast, but he reminded me he's the only single person on the panel. So ladies, do not slide into the DMs. Welcome. He is none other than David Rose. Hey, David.
Good night, everyone. I'm David Rose, currently a third-year student at the University of the West Indies, contributed to finance to JA, member of the Jamaica Chess Federation National Legislative Council, and different other areas of life. So my main driver towards finance really came about learning how to actually manage your money better. And even up to recently, I have been talking this gospel of reading and taking your time to manage your finance. I'm not an advisor. I'm just saying anything you do in life, take the time to read, learn, so you can discover. That's my personal mantra. So when people ask me what I want to do, just learn more and see how I can actually benefit from that knowledge.
Thank you, David. And I know you're making your colleagues up at the UWI proud. Again, we appreciate and acknowledge your passion for encouraging everyone to become knowledgeable, learn, read, and certainly seek the requisite licensed guidance to get the advice that they need. It's wonderful. I love the big ups. Yeah, man. Casey and Anna Kay saying hi, David. Troy saying big up, David. Yeah, man, the big boss. Love it. I love it. The fan club. The fan club is going. Hey, Phil. Love to see you. Glad to see you. Big up. No, because I introduced David last, as I said, he was certainly not least. But the reason why I introduced David last is that, when we started to share and put the flyer out, that we're going to have this conversation tonight. When we first spoke to David many months ago, he was highlighted as a young investor. And I think it was Phil who started it. I'm not quite sure. But he was like, young investor just doesn't cut it, right? That's not a good title. And we said, okay, what title do you think David should go by, right? And we put a vote out based on some shortlisted options. We consulted with David. Okay, David, what options do you think need to be there for consideration? And then we did a little poll on Twitter, right? And the poll came back with some interesting results. And we do have a most popular vote. And the popular vote that everybody said David should now use when he's referring to himself is called Investment Research Analyst. How does that sound, David?
My future title, so get used to it from now.
Okay, so that's what you plan to be when you finish university.
That's the plan.
Great, wonderful. So guys, you heard it here first. Investment Research Analyst. Thanks for all those who participated in our fun little poll. Janet says she's proud of your son. Janet Johnson says I think it's David you're talking about because she named Johnson.
Yes.
So Simon, she connected to. Let me not get myself in trouble. Yes, so that's it. So guys, let us get right into it. So we've done all the pleasantries. Let's get down to business. We're going to be here for another, say, 60 minutes. We have some questions that we have. We've been doing our listening on social media, following, the different conversations that people have been having at this time. And of course, we would have had a similar conversation some months ago at JMMB Elevate. But in January compared to now, who would have thunk we would have been going through this situation, right? It was something else. I mean, granted, when we were at Elevate, a couple of our advisors had already said to Jamaicans, this year is going to be a different kind of year. This was before anybody knew that COVID was even going to hit or what impact COVID would have had. But they were bracing Jamaicans to say, guys, this is going to be a different kind of year. That was a word coming from our group client investments manager and our head of trading and treasury, deputy head. And so here we are. And, I wanted to start off the conversation with just a specific question to Simon. Simon is our senior capital markets analyst. And one of the things I know conversations that we see occurring online, Simon, is that people are saying we're now in a bear market where stock market investing is concerned, that we would have come out of a nice couple of years well of a bull market sort of scenario. And now it's a bear market and they're blaming that is COVID bring on this bear market. Could you just kind of just level set with some context? I mean, you are the broker analyst among us here. Could you just share with us what is a bear market? How is it different from a bull market? And is it really COVID's fault or has this thing been happening for a little while now? And why?
Okay, so just to give some context, so we have bear and bull, right? Now, why is it that bear represents something and bull represents something? If anybody knows anything how bear attacks, they stand on their hind legs, their back two legs, and they attack down, right? So the bear typically represents a market going down. So hold on there for a second. Now the bull, when a bull charges to attack, they attack up, right? So a bull market is typically representative of a market going up. Now the question is how much up or down. Now, generally, what seems to be the consensus around what constitutes a bear market is a 20% decline over a relatively decent amount of time. So I've seen where people say it's around 2 months. So a 20% decline in asset prices over a relative short period of time. And people must know that a bear market doesn't necessarily have to be associated with the stock market. It's a general decline in asset prices. So a bear market can also mean that real estate prices or some other asset price is also going down as well. So just to give some context around this. So yes, Kerry, I have heard that people have been saying that COVID has pushed us into a bear market. But if you look at the combined index, I'm actually looking at it on the other screen now. Over the past couple of months, if you go as far back as the mid last year, the market has been generally trending down since mid last year, right? So overall, over that period since last year, the market would have come down by around 25% since August of last year. The COVID scare really came to Jamaica around early March, right? And yes, the market did take a steep decline after that. Okay. Now, whether it's COVID induced, so the last sharp drop in the market is COVID induced, but I wouldn't say the overall bear market has been COVID induced. So I've heard people say or speculate that over the past couple months prior to COVID, investors were selling their stocks and taking their gains to reinvest into new opportunities that were coming into the market. And I'm sure that other guys can give some more context around that. So that's typically what it is.
Thank you so much, Simon. We appreciate that clarity. So I think then the point is made that what we would be seeing as far as bear market activity, just to summarize your point, is that since about August of last year, we've been kind of seeing that kind of downward trend, as it were, about 25% coming up until, yes, COVID would have had that impact, and we would have seen some knee-jerk, as I call them, responses to what was happening, perhaps. But it's something that has actually been occurring since about August. Is this? Would you say it's a kind of a correction that was taking place? Again, from your analyst perspective, from what had occurred. Is it a correction? Is it something that had to happen?
Yes. So typically, markets go through corrections multiple times. Corrections don't necessarily mean that we're in a bear market or a recession. Sometimes the market is a bit over exuberant and stock prices or overall asset prices go up and shoot over where their actual value is. And when investors realize this, they start to take gains off the table, which brings it down to a level and it goes up and down, etc. So a market can correct multiple times over let's say a year or 2 year period. But the bear market is usually a relatively steady decline in asset prices or prices over a predefined period of time, and it's usually around 20%.
Thank you so much again, Simon. And just to again thank you for that context. And just to remind everybody, as I said, we've been doing these live streams for a couple of weeks now. And JMMB, we did do a live stream titled "How to Keep Your Investments on Track During COVID-19," and that featured our group client investments manager as well as our senior trader in treasury and trading, Greg Lindo and Peter Thompson, respectively. And we encourage you to take a look at that. They really gave some great context as well and nuggets and guidance about how to proceed at this time. So we invite you. It's on our YouTube channel, JMMB Group. Look it up, and you can certainly sit back and relax. We have a nice long Easter weekend with nowhere really to go. So feel free to take all of that in at your convenience. That's just a word to our viewers. Great. So having set that context then, Simon, I'm going to open up now to the questions and bring in Marc and David as well. So, now that we see that, yes, given the overall conditions in the market, yes, there's bear market type conditions that would have been happening for some time, and then there's a more immediate impact of COVID per se-ish. I guess I just wanted to kind of know, because again, you're not giving advice, but I'm trying to understand from your personal perspective. Have any of you, I'm going to start with Marc, have you ever invested in a bear market environment or in a time of crisis, just to get a sense of if you've ever done it before and what is the biggest lesson you would have perhaps learned personally having done it?
Yeah, so I guess, so the short answer is yes and no. Yes, in the sense that, so I was a currency trader, so I was investing in currencies about 2 years before the financial crisis. That's when I kind of started. And so I did, I was currency trading, invest in my own cash, in the currency markets, the global currency markets during the crisis. And so I got to see firsthand, the market's gyrations, the significant volatility, the crazy swings based on every single, movement in response to central bankers from the ECB to, the Fed, and, to the Treasury Secretary. Like I got to experience it firsthand. And, one of the things that I took away from it is that, so I kind of got through it relatively unscathed from an investment portfolio perspective, but that kind of led to a certain amount of overconfidence, to be honest. And then, that led to, ultimately, so one of the features of a currency market is that you can use a lot of leverage, right? So a lot of the brokers give you, a whole lot of leverage. And, with an overconfidence that comes with having relatively successfully navigated, some of the most treacherous waters in the currency markets, up to for the last 20 or 30 years, I did get a little overconfident, and ultimately led to just a complete blow up of my personal portfolio at the time. And one of the biggest things that taught me, I learned so many lessons from that. One of the biggest things that I learned is how difficult it is to invest from a fundamentals perspective in the currency markets, just because the currency markets are so deep and there are so many different variables. You have to use a lot of, technical analysis, and in the middle of a crisis, technicals have a tendency to fail. And so the takeaway from that for me that I'm using now or that I've been using since, is that I do like to, so that has informed my value investing perspective when it comes to looking at equities. And what I love about equities investing is that I can, look at an underlying asset. So I can look at a company, I can analyze the fundamentals of the company, how the current economy that the company operates in will impact the company going forward and the free cash flows it generates, and then make my investment decisions based on that. Whereas in the currency markets, it's completely different. So yeah, that's my perspective on the bear markets.
Thank you. Fundamentals. I like that. David. So David is the youngest one of the group. So perhaps not much experience in a bear market environment, I suspect, right, David? But you're here now. What is the biggest lesson you're learning about investing during this time?
Well, I did some research last summer, and I was looking back at the prior events during the other days. So during the financial crisis 2008, the JSE index went down from like 100,000 points to around 8,000 points in around 2010. So right now, before COVID even occurred, stock prices were declining thanks to the Transmake IPO. So persons were pulling cash to invest in that IPO. And then COVID came around. So when Trans came around, based on my experience from early IPO in 2016, ending 2017, I said, all right, time for me to step back on some of my portfolio positions and re-enter them later on to see how I can actually get more units and avoid taking a potential loss on some of my positions. So for me, so far, especially even now during the COVID times, I've realized that, as Marc highlighted, technicals and fundamentals don't necessarily have an advantage for you in particular in the rationality, where there is fear and lack of driven decisions by data or some other metric. So right now what I've been doing is sticking to my fundamentals in terms of choosing opportunities that actually can work for me. So I'm not going to necessarily jump and say, all right, this has gone to 50 cents, I'm going to buy it, see if I can get to 60 cents and sell it back. No, that's just unnecessary gambling. What I mean is I'm going back to my fundamentals, looking back at the stock's liquidity, because during the initial phase of COVID, a lot of stocks were, as you could say, they're in a buyer season. So you would not see much buyers on the buy side. You would see a lot of sellers though. So even right now, I've become more cautious and a lot more calculated, especially considering that they're in a bear market or in a recession, or in general, as Warren Buffett says, you don't want to lose any money. And that's rule number one. So my takeaway from the bear market right now, as you could say, an upcoming recession, is stick to your game plan. Even though your strategy might change, go back to your Excel spreadsheet or whatever tool you use to guide your decisions, but don't just go haywire and say, all right, I'm going to sell these stocks because, everything's going to collapse and pull them onto the market. Over the historical period of time, based on different existential crises, recessions or whatever, asset prices, including equities, do go back up. But it may require you to do a fundamental reevaluation of your portfolio and your decisions.
Thank you. So I like that lesson that you say you're learning, stick to your fundamentals, go back to your game plan. I think that's a wonderful lesson that you learned there. Brother Simon, what's the biggest lesson you learned? I'm not going to age you, so.
I'm a lot younger than people think I am, Don't make the beard trick you.
Okay.
So, as I had said at Elevate before, while studying, I wasted a lot of time talking about investing rather than actually investing. I've never invested in market environment, not even as it pertains to the JSE going down 10-15%, but in a market environment where there are large external factors such as a global pandemic or a potential global recession. Before I go into my point, I just want to point out to people that there are multiple different investment strategies. So me personally, my strategy, as pointed out, is majority of my portfolio is more geared towards value investing or investing based on the fundamentals, right? And I stand by those fundamentals even in these times. So what people have to do, and all of us would have pointed it out in Elevate before. Go back to your research, do research on the companies, find out what they do, how they make their money, and especially in these times, find out how COVID-19 or global supply chain movements, etc., will affect that company. And you can do your type of investing based on the research that comes out from that. So stick to what you know best. So there are people that would say that would disagree with what David said a while ago and said I'm okay with gambling. I can buy a stock today and make 20, 30, 40% by next week. However, I always stick to the point that I have not been proven incorrect. Not every investor has the ability or the time to do something like that. Stick to what you know. Stick to your investment strategy. Mine is really just focusing on the fundamentals.
Thank you, Simon. And the common theme that I'm getting from the three of you about the personal lessons you would have learned investing in an environment like this is sticking to your fundamentals, stick to your game plan, doing your research, And again, there's tons of research available. JMMB, being a broker, our website is chock full of information that you can use, and speaking with a licensed advisor to get all the information you need to make wise decisions and to plan accordingly. I just acknowledging the comments. I see where, Casey Ann is saying here that's right. She's listening to the lessons that you guys learned. That's right. Stick to your game plan. Long term is the way to go for her. She says she can't deal with the speculation, and I'm with you on that personally, Casey Ann. Thank you for that comment. So great. So guys, okay, so you've shared the lessons you've learned. So now that we are in this current period, and again, we wouldn't have necessarily thought that it would have happened this way at this point in time in 2020. Can you say, are you personally continuing to invest right now, or are you taking a little break personally? What's your strategy right now based on the lessons that you would have learned? Let me start off with David.
Well, I've been investing in this quote-unquote bear market, but it's been a strategy, as Simon highlighted as well. So in the early part of March, price has declined significantly. So as I said, I adjusted my positions again, kept some cash in reserve, and built some cash reserves elsewhere as well. So as I saw the prices continue to decline, I continue to look and say, all right, what fundamentally as a company is going to be valuable to me 10 years on the line, not just in the next probably 5 days. So some of the companies like household names, I want to specify them right now. I look back at them and I said, all right, what is their business plan, what is XYZ, how did they get their money. And then other companies, some persons were saying, it's cheap now, can get them. No. So like people were saying, get this stock or whatever. I was like, for what reason? So even earlier today, someone said, I work this company. I'm like, have you read the financials? And I still look back at that for my guidance, because if you understand how a company works in its normal period, and if there is data towards guiding you as how they work under a different condition, some sort of shock, then it's a different perspective you can actually get from it. So even up to last week and the prior week, I to deploy capital now at some of these quote unquote bottoming for some of these stock prices, and I try to derive some gains from these new entry positions. And as I've said, I've stuck to the fundamental companies. I haven't said, all right, it's not going to go by X percentage or whatever, because you keep forgetting, no matter if a stock goes up by 10,000%, if you cannot sell it in the future, then it's just an asset that you cannot liquidate, basically. So even up to last year, an article in Business Report said Palace investors are probably happy because they get X percentage returns, but the reality is the stock was liquid. And some stocks right now are still relatively liquid on the market, where it's hard for you to dispose of them if the event comes where you need to dispose of it. So right now for me, it's about looking about how liquid the stock is and what opportunity I can get if there is an opportunity in the first place. So instead of just saying, jump and buy the stock now, there has to be some driving fundamental and research behind it as to why I'm going to get it. Technical analysis helps, but that's still my fundamental perspective that there has to be some basis for you to get any stock, especially in market itself, might not even survive until the end of this extended period.
Thank you so much, David. I just love that undercurrent theme, doing the research, sticking to the fundamentals, and knowing what you're all about before you make decisions. I love Mark. What are you doing right now? Investing right now? What are you doing?
Yeah, so I will just echo everything that my other panelists have said for sure. So I am investing now. I think now can be a great time. There are bargains to be had, but I definitely want to caution, people, like, not just because prices are falling means that, it's a good investment. Not because, stock price has fallen 50% means that it's a great buy. The truth of the matter is that, stock prices fall for a reason. And so, the real question that needs to be assessed, that everybody needs to, kind of like know for themselves is, why has this stock fallen? Is it just because, the market is being irrational, or the market is overacting, or is there an underlying fundamental issue? Has there something, has something significantly changed with respect to, this particular company that I need to be aware of, right? And so for me, what I am doing now, so like at Elevate, one of the things that we all, agreed on and spoke about, ad nauseum, was the idea of doing research and kind of understanding, thoroughly what you are investing in. Like, what is the asset that you are buying, right? So taking the Warren Buffett thesis and pretending like you are buying the entire company, right? So you're looking at the stock that you're buying or that you're interested in investing in, and doing research as if you are going to buy the entire company. And then once you determine that, okay, yes, I'm interested in owning this entire company, and you want to add it to your portfolio, you kind of like keep the mental model of the research that you've done in your mind, and then as the environment changes, you update that mental model, and not just in your mind, but also in your research. So for example, how will COVID-19 affect the revenues of the company? How will it affect the margins? How will it disrupt the supply chain of this particular company and cause its cost of goods sold to increase? Will it provide new opportunities, for, a recently launched business line, or will it provide, a brand new strategic opportunity for it with a new business line, or strategic, acquisition opportunity, or, so I guess what I'm saying is that, during any significant economic event, there is, there are significant changes in the marketplace, both in the financial marketplace in terms of mergers and acquisitions, and then also just in terms of just the fundamentals of the way the amount of products and services that a company can sell, and the amount of profit that they can make off of the revenues that they earn. And so what you need to do as an investor is that you need to kind of have a thorough understanding of what it is that you own, what is it that you're interested in, and know how the crisis will affect that. And so for me, what I've been doing is I know my core kind of portfolio companies. I watch them carefully. I know how they are going to be impacted, and I'm constantly watching them. And as I compare what is actually happening versus how the market is doing, and if I ever see an overreaction, the market is overly fearful and push the price down much lower than the fair value in my view, based on my research, then I will buy more of that company, given that is my that's my general strategy. And so that is kind of like the overall approach I am taking, because what I am trying to do is just own a number of high quality companies over the long term. That's kind of like my overarching portfolio thesis. And then from time to time I will look for small plays that can generate significant returns in a relatively short period of time, less than a year.
Yes.
But yeah, that's a general kind of like perspective.
Thank you so much, Marc. It's great to hear these personal lessons, and again, the undercurrent theme, do your research, stick to the fundamentals in making your decisions. Simon, what are you doing right now?
Yeah, so and I'll be quick. So my situation is a bit different from David and Marc. I wish I could be doing what David and Marc were doing. So earlier this year, I made some major personal moves, and as such, and boy, some people would say I'm lucky. I sold a percentage of stocks at some very good prices prior to COVID, in order to take advantage of some other opportunities outside of the market. So that has left me in kind of a liquidity crunch. Sorry guys, I mean like a cash crunch. But right at the start of COVID, I took positions that I suspected would have paid off, not even just within the period, but even outside of the period, and those are paying off. But a strategy that many would tell you would work now is combine the research and the fundamentally strong companies together. Okay, you have that knowledge and you have those companies that are fundamentally strong. There's something called dollar cost averaging, which is basically you invested a specific amount of money over a period of time, and basically continuously purchasing various investments over a period of time. So overall, your average price, or the average purchase price, so that is relatively lower. So when COVID does pass, and it shall, and when any contraction in the economy does pass, you are left with stocks that are at a price that you cannot get them outside of a economic contraction or a COVID period. So that's one strategy that I would be employing at this moment, as soon as I get some more liquidity.
Thanks, Simon. I appreciate your openness in sharing that testimony, because it just goes to show, that everybody, based on their goals, their risk appetite, everybody's strategy is different. And again, we're not offering financial advice on this particular stream, but the fundamental understanding has to be that because everybody is different, there's no cookie cutter approach. What works for Simon may not work for David, may not work for Marc. And at the end of the day, again, sticking to the fundamentals, doing your research, and using the services of your licensed financial advisor is always great. So let's switch gears a little bit. Let's take ourselves a little bit out of COVID, a little bit. And again, appreciating your openness, gentlemen. And I'm going to start back with Simon again. Is when you think now over all the years that you've been investing and managing your money, right? You would have probably bucked your toe in everything in life. We buck with toe, we learn we make some mistakes and so on. What's the biggest what should I say? What's the biggest lesson that you would have learned, in terms of investing all these years? What's the biggest lesson you would have learned based on perhaps a time where you would have booked your tool?
Boy, I've learned a few, but what I would say is the one that I'd probably want to talk about and encourage investors to get out of is having emotions in the market. So I have been in the position where me just not like that stock there, right? I just don't like the stock. Me not like where the manager of the company said at one period of time, I had this stock for a period of time, and I was beating it like a dead horse, and it didn't give me any returns. And as soon as I sold it, it went up 50%. And I was of that mindset over a period of time. And then on the other side, I was of the mindset as well where I married myself to certain stocks, right? I treated them like my wife when they really should have been. And this is the only instance in which you would do this.
That's
They really
right.
should have been your side pieces. You really should be you really should be less emotional with them. Come get your returns and leave. So that's one thing. That's one hard lesson I've learned over the years, to take my emotion out of it. If my research is sound and I bounce my research of capable people that understand the market, and they say, okay, it makes sense, then I am going to go in. If my research says don't go in, you should be selling, then I'm going to sell, and I'm going to rely on that, because sometimes our brain, plays tricks on us.
I love that one. Yes. Don't treat the investments like is your wife, you say, and instead treat them like the side piece. Is that it?
The only instance in which you're supposed to be
Oh,
side pieces.
that's right. We're not preaching that. Right. Only instance in which we're gonna say. That's great. That's great. So essentially, so what you would have done differently is, take more of the emotion out of it, and again, sticking to your goals, your strategy, the fundamentals, the research. That's great. Thank you for being so open and sharing that lesson of what you would have done differently. David, what would you have done differently, or the biggest lesson over the years you've been investing?
Well, right now I'm actually doing much more in-depth research. In the past, I was doing research, but I don't believe that research I did then has really affected my potential gains I could have derived now. And I have to say that, oh, I should buy the stock then, I'd have been happy. No. So I'm doing research. So even right now on Twitter, I did a research on the largest company in the JC by market capitalization. I went through and saw how they got their money from subsidiary, from everywhere else, how they derive their money. And it even went back to the FinSec era in the late 1990s, and I learned about how some companies were acquired during this time. So the research actually has been something that I've been more, I should say, interested in, but also more dedicated towards, because I realized that if you look back then, some companies, people are saying, oh, Jamaica is done for whatever. If you held them from then to now, even at $100,000 back then, it would have paid off significantly. So, for example, in this case, it's not financial advice, guys. Panjam owns the Manor Park Plazas. It owns the Scotia Center, the Panjam building, and a few other locations. So, when I first got Panjam, I wasn't necessarily sure to that extent as to where they were coming from and even where they're going now. Even with the recent volatility and everything, that's one stock I haven't necessarily let go of, just because I've said that's a stock I'm going to leave for the grandkids, not even for my kids, for the grandkids, just because I understand the fundamental value from my research and where I've seen the company come from then to now. And even companies such as Sagicor and Guardian Holding, when I saw what happened back in the past and in the FinSec, and I saw where one company was able to derive significant gains by acquiring other companies, it's like Warren Buffett is doing right now in the US by acquiring Delta and other companies. I have seen that you have to see what other companies can potentially do to leverage the certain environment in this case and maximize the future gains. And you should also do your research and go deeper, not just the last 5 years, but back in the start if you can, if the information is available, because the information derived then can serve you so much better, not just in the next 10 years, but probably in the next 50 years. Because there are some investors who have held stocks from the day it has been listed, and the dividends they're getting every quarter is their pension at this point. So that plays back to, my goal is as one for yes, but the research, I've become more appreciative of the research I've done just because of how much more value it has become to me.
Thank you so much, David. And, I appreciate that, because again, you guys sharing so openly about your lessons learned and things you would have done as an investor, and again, we're not offering financial advice. I'm glad, again, you clarified that, David, because whatever stocks you purchase for your personal goals and objectives is not what I should be buying, is not what Mark or Simon. In fact, I'm looking at the live comments and I see a lot of people, Simon spoke about who should be the wife and who should be the side piece, as it were. You have some people declaring who is their wife, who is their side piece. Somebody said, Cinco is mine and VM is mine. I mean, everybody's having fun in the comments regarding, which stocks are working for them, and that's, again, the beauty about it. Mark, real quick, what would you have done differently, the biggest lesson?
Yeah, so for me, the biggest lesson has really been the way that I allocate my my cash, or rather, be a little more bold. So I guess from my perspective, it's a little different. So I am an entrepreneur, and I have been advising a number of entrepreneurs and companies for the last maybe 10 years. And one of the ways that I've structured that is, I have gotten compensation in the form of equity in a lot of these companies. And so I do have, a private equity portfolio, meaning I have, stocks. I own stocks in companies that are not publicly traded, right? Or own equity in companies that are not publicly traded. And for the longest time, I always said to myself, that's fine. I don't need to own any public equities because, I own all these private equities. And so eventually when those companies go public, then I'll be fine. But over the last couple of years, I made a decision that, the truth is that the opportunities are too great to ignore. And so, I have been a lot more bold in my cash allocation. So rather than, just saving it or, investing it in my own company or in myself, I have started to, in a more bold way over the last couple of years, buy public equities for myself. So that I think that's a little different than I think most people will find themselves in. But the thought I would put out, or the advice I would give, is not financial advice about what stock to buy or whatever, but the one thought I would put out there is, because everybody is kind of looking at purchasing equities for their public equities for their portfolio, what you should also think about is, how can I earn equity in privately owned companies using something that I can do, some value that I can create, right? So whether I'm an accountant or a lawyer, or, I specialize in something, supply chain management or, office management or whatever it is, like, how can I approach an entrepreneur or company owner and say, okay, I will earn X amount of, I will do something and create value for you. And if I can create value for you, then let us talk about what an equity situation may look like, provided that, they will, ultimately go public. That's what they're, provided their goals are similar to yours. So that, that's kind of like the main thing I would say is, kind of like do the opposite of me, where, I have been focusing, mostly on private equity. And now I have been, in the last couple of years, focusing more on public equity. But you, as a public equity investor, you can think about, how can I use my sweat equity, as it were, to earn, equity in privately owned companies.
That's an interesting perspective that you're sharing, Mark. And again, we really appreciate you guys being open about your own personal experiences, because investing, and people think investing, they just think the stock market. And as you are sharing with us, again, from your perspective, that there are other things that you could invest in. You could be a shareholder, again, in a private company, probably in exchange for a skill that you're able to provide. That's something perhaps to think about. And again, in discussion with your, financial advisor, or even just as a private discussion with your loved ones based on your goals, that's definitely good food for thought. And again, I'm really being entertained by these comments. I'm seeing here, JMMB is my wife. JMMB is my loving hobby.
Kerry, I want to point out something to the guys in the comments. Remember that Rona is here now.
Rona.
So whoever wife up whatever stock, remember Rona is here to take it from you. So just be very careful with doing your research as to how Rona, the outside woman, the outside man, can affect your relationship.
I love that one. Yes, Rona can give bun. I'm kidding, but no. The point is, and I think it's coming back to the general experiences that we're sharing here. That again, the fundamentals, and while we at JMMB are happy to hear so many people love us and are married to us, we always advocate, making wise financial decisions based on fundamentals, based on research in partnership with the licensed financial advisor. And there was a question in the comment. I'll just address it here because people are asking, where can I get information? And that's kind of leading into the next question I have here for you guys. But just to say, the Jamaica Stock Exchange website, for those interested in investing in stocks, great resource. JMMB at our website, jm.jmmb.com. If you go on our site and you see in the primary navigation bar, we have a life goals section, which has a blog of personal financial management tips and recommendations. But also there's a market insights. So go to jm.jmmb.com. There's a market insights tab right there in the primary navigation bar, closer to your right, chocked full of analysis and research and information as well. So it's there, folks, nice and easy to find, and we're happy to provide that for you. And as I said, the Jamaica Stock Exchange, always an excellent resource. They do the market disclosures as they happen as well. So stay tuned with them. I highly recommend that. Great. So next question, because as we're talking about information, because everybody's like, yes, we need to do our research. We stick to our fundamentals. I think that's the lessons that we're here coming out, and how you guys approach your own personal investments and money management strategies. Could you share with us, and I'm going to start with Marc. Could you share with us, Marc, again, from your experience, what kind of information do you use, typically when you're making your financial decisions, and where do you find it? Just what, again, from your perspective.
Sure. So, so what I tend to do is that, I use, and so first I start from the basis of understanding the company, right? And you can, learn about the company by just looking at the public information that they publish, right? So on their own website or on the JSC's website, they do publish, the annual report, or the audited financials, the quarterly financials, any news, anything like that they're constantly. It's mandated that all publicly traded companies publish investor material information at the same time to, so that the entire market can see it. So I consume a lot of that, and I read the dailies, I pay attention to the news and so on. But no, so that's kind of like the basis, right? So once I do that, and I have an understanding of, okay, how does this company make money? What do the margins, what the margins look like? Does this company fit within my portfolio? Do I like, kind of like where the perspective, do I like this company, as a portion of my portfolio and for my limited amount of cash? So that's kind of like the baseline. And then once I have that, then I take the information that comes out on a regular basis, and then I use it to update, kind of like my model, right? So I may create an Excel spreadsheet, and then I calculate a valuation, and I see, what the valuation should be according to, the things that I'm watching. And then from there, I'll pay attention to different key levers, whether it is, revenue per square foot, with Fontana, for example, or the amount of, like, the average yield for the weighted average yield for the portfolio companies for Cygnus, as another example. So I will look for key levers for different companies that I watch to see how how those levers work, or how those levers are doing, and then I use that to kind of update my mental model or my valuation calculations to see how the company is doing. Is it fairly valued? Is it a good buy? And and whatever. And then, but now what's interesting, about the bear market or crisis is, now it's very, very different. Now you have to look at the fundamentals for sure, but then you also need to look at, okay, how will the current environment impact the revenues and expenses of the company? How will it impact, the net income, so your profits and cash flow, free cash flow, right? So the dividends that it can potentially throw off ultimately. And then also, how will the crisis affect the liquidity position, right? So the short-term ability for the company to be able to pay its bills, right? So that's a very, very important metric right now. And then also, how will it impact the company's solvency? Solvency meaning, the long-term viability of it being a going concern. So because COVID is a one-off event, it can significantly impact those two, liquidity and the solvency in a significant way. And so healthy companies can run into liquidity and solvency issues. And if they do, then they could go bankrupt as a result of just, a major shift in the fundamentals. So yes, so what I do is I say, like, I just consume all the public information, and then I look out for those two things right now, in terms of the liquidity and the solvency, which is driven by, the impact on revenues, expenses, profits, free cash flow. And then from there, I will then, use that to determine whether or not, I think it's still a good, play in my portfolio, or I want to double down, or I want to dispose of it.
Thank you, Marc. Great. I love it. And as I, just again, I love the underscoring of looking at that, publicly available information, particularly through the stock exchange. David, what information do you use, and where do you get it for your own personal investment approach?
Well, for those who know me on Twitter, they see me publish information from all sorts of places, and there are basically two places I'm going to underscore. So you have the internet, and you have those things you can see around you, generally. So from the internet perspective, the internet has basically opened up this massive caverns full of information we can source from almost anywhere. So as Marc said, you have the JC's website for one, but you also have the TTSE, the Trinidad and Tobago Stock Exchange. So sometimes a disclosure might be apparent on the TTSE, comes on the JSE, of companies such as Grace Kennedy and NCBFG, which are listed on Trinidad Stock Exchange as well. And then sometimes you have a Mayberry, a Barita, or other websites where your information is published, and it's not going to the JSE or whatever, but it is there for you to actually digest and use to your advantage. So some brokerage firms actually go to AGMs and take notes and make their draftings and post on their website for anyone to come and see. And then there's also the case where you have to go back in time to get information. So for those who know, on the JC's website, to make an annual report, information. So the old Jamaica Gleaner, the Observer, all prior articles, newspaper articles have guided me in allowing me to see into the past and getting a better perspective of what's going on. And you have things like investing.com and different opportunities on websites, MoneyMax. And as I said, that's just from the basic public information perspective as to the company information they publish. Then you have information like if you're looking at a company that's in Cambios or remittance, you go to the BOJ's website for the remittance data, starting for employment or other particular guided data. And then sometimes you have to actually go to the company's minutes. So when you go to an annual meeting for a company, they will record the minutes for the company, and some companies will publish on their website. Other times you can actually email the company and get the minutes of the AGM. And that matters because sometimes what is published in the newspaper doesn't capture the essence of the meeting itself. And the AGMs, so for those who don't know, when you're sharing a company has to have an annual meeting for shareholders once every year. So when you go to the AGM, you can ask the directors, you can talk around, and the other thing is that actually, even though mentioned in the annual report, might not be explicitly stated out in front of you. So last year, Kingdom Properties in their annual report said they incorporated a subsidiary. But when I asked them why they incorporated a subsidiary, they ended up explaining that it was because they wanted to get the SE status for a building. And that's just for internet perspective. For looking around me, general indicators. So even in the COVID time right now, you go to a supermarket, almost any supermarket, you look on the shelves, breads and several other assortments are gone. In the US market right now, Clorox, which is a company, suffered significantly. And as you can look around on the supermarket shelves or based on their sales or disclosures, you realize that their products are selling. So just general things that you can observe in your environment can guide your actual advantage in terms of information in that perspective.
Thank you, David. I appreciate your sharing that. It's interesting, when you talk to people who, based on their own personal money management strategies, the things that they're looking. And so you've raised a couple of new areas here that, are interesting. Yes, apart from the Jamaica Stock Exchange, you said that you love to time travel. There was somebody here who says David loves to time travel, go back in the past. I love that. Yes, Matthew said David loves time travel, which is great, it's great. Looking at a company's annual report, their meeting minutes, the BOJ website, Statin, all great sources of information. Thank you so much for sharing, David. Simon, what's up? Where do you get your information to do your own personal investing? Oh, Simon, I think you're still on mute.
Sorry.
Thank you.
I won't repeat what other guys would have said because I support it. The stock exchange website, other exchanges, the financials, etc. But I'll take this from another perspective. We must remember the market that we're in. A market is a combination of everybody, every type of investor, right? There's a saying that says the person that sells the stock to you thinks it's garbage, and you think it's gold. So how I get information comes at me from all over. So I speak to people that are interested in stocks, and I get their perspectives. I look into financial statements to confirm my opinions, etc. But a lot of the things are the financial statements. The issue with it is that they are backward looking, right? So it's good to know where a company is coming from, but it's also good to know where the company is going, right? So the annual report does a good job of doing that. The AGMs, you can actually go to these AGMs and put your questions towards the executives of the company. You can talk to people out there, see where what they would have said. The Gleaner usually releases snippets at times as well. And on last gem I'd like to leave people with is the market tends to focus on a specific set of stocks over a specific period of time, right? You can be a contrarian. So those 5 or 10 stocks that everybody seems to be buying that's going up, the attention will move to the other stocks. You need to get there first and see where the market is going, and don't follow behind the market. So just to give an overview, financial statements, annual reports, AGMs, and I just talk to other people as well. I always encourage people to DM me and message me if they have any questions at all.
Thank you so much, Simon, for sharing that. I like that, having conversations with persons in the industry, again, persons who have the knowledge and the information to be able to kind of round it out, So we have the stock exchanges, websites, we have the central banks, we have the annual reports and minutes. I love that you recommended going to the annual general meetings as one of your strategies. You're mentioning that is one of the strategies you use, because that's also a very good way to get the understanding, posing the questions to the principals and getting your answers, again, to support your decision making. It's great. Thank you so much, guys. No, I've been seeing a question, somebody said it, I don't know who it was, that JMMB is avoiding the J Trader question. So let me just say it here, right? I'm not making any official announcements on behalf of JMMB, but all I'm going to say is, we hear you, stand by. I'll just leave it at that. Stand by, it's going to be good. Just stand by. I'll leave it at that. So we're not dodging anymore. I'm just going to say thank you very much. Great. So coming down now to our final question before we wrap and then leave with a final summary. So you don't want to miss that. And then I'm going to announce when is our next live and what it's going to be. You don't want to miss that one either. So stay tuned, guys. We have about 15 minutes left. Just for you guys, again, from your perspectives, I'm going to start back with Simon. We know that not everybody has the knowledge. So we talk about, fundamentals, research, and so on. And even with the best of intentions and doing that, not everybody has the knowledge to be able to, I guess, bring all of that together to make those kinds of decisions when it comes to investing. What word would you have, again, based on your perspective, about utilizing the support of a licensed financial advisor to be able to participating in the investment landscape, based again on your experience, because it's something we certainly advocate at JMMB.
Okay, so two things. I would disagree a bit with you, Kerry. I believe that everybody has some innate ability to understand at least the basics of how their money is being managed, of the very basics of investing, right? And that is why I focus on financial literacy so much, because it can be done, right? However, financial advisors do serve a purpose. Financial advisors are there to hold your hand and guide you along your financial journey. Now, that doesn't mean that financial advisors are there to do all the work, right? So, I mean, you can imagine if you're a financial advisor and you have 500-600 clients, and you also have to take people that are coming into the branch on a daily basis. You can't guide 500-600 clients and take walk-in clients at the same time. So we have to do some of the work. It is beneficial when you can go to a financial advisor and ask them pointed questions, right? However, the financial advisor is there to guide you. Now, I've heard the argument, and there is truth to it, that there are financial advisors out there that aren't giving the best advice, right? And what I always encourage people to do is, marry to your financial advisor either. If you have a financial advisor that is not fulfilling their task, one, you can take it up with their supervisor, or you can switch your financial advisor. And if nothing helps, guys, you do have the ability to switch your broker and move over your assets to another broker, such that you can get the quality of information, the quality of service that you do deserve, right? Yeah.
Thank you, Simon. I appreciate that candor, because again, we're JMMB pays our salary. Let's just be straight. But at the end of the day, we recognize the power of the consumer, the power of the investor to make a choice that is in their best interest. And sometimes that choice may not be JMMB, it may be another entity. And even within an entity, again, you have different financial advisors. It's about what works for you. I do appreciate that, because ultimately we're about the person's best interest. So definitely a great point. Marc, real quick, what would you have to say?
Yeah, so I mean, I'm gonna echo everything Simon said, to be honest. I think that I empathize with some of the financial advisors. There are, I guess, sales targets put on them, and they have to be selling products and all that stuff, and so I understand that. But I do think that everybody has the ability to be able to understand, at the very least, the basics. You don't need to be a day trader. You don't need to, be following the markets all day long. But everybody has the ability to understand, how to read financial statements. It's just like reading a book, right? It's just a different form of reading. And so once you understand the basics, understand, the fundamentals, then you can, be a good steward of, over your money. And I would actually, challenge financial advisors to, to be a little more creative and a little more, kind of like, big picture and wholesome with the advice that they give. Like, for example, and this is not financial advice, I'm, just sharing a tweet that I read, or a thread that I read, from somebody in the US. This girl was explaining how, she used, basically she went to her landlord and she said that, you know, if I pay for 12 months worth of my rent right now, can I get a 15% discount or a 20% discount or whatever it is? And he said yes. Then she went and she got, you know, a credit card that had a 0% interest rate for like 2 years or 3 years or whatever it is. She put the entire year's rent, you know, on the credit card, and she saved, you know, 10 or 20% of her rent. And then over the 12 months, she basically paid off the balance, you know, for you know, over the 12 months rather than the 24 months, right? And so that was like, I found that very, very clever, because every single month she essentially saved, you know, this is in the US, so she saved like $200 or $300 on her rent every single month, and that paid for her utilities by just doing a small amount of, you know, kind of clever thinking that, you know, every single financial advisor, you know, in Jamaica, I think, should be kind of giving us this type of advice, not necessarily specifically just about stocks, but about, you know, your entire financial well-being and how you can optimize for, you know, your own benefit, not for the benefit of, you know, the company, you know. So yeah, so I think that we all have an obligation to learn ourselves and to, you know, become armed with, you know, financial knowledge, which is why, you know, Finance with a JA is a thing. You know, the whole ethos behind it is that we're just trying to share as much knowledge as we can so everybody can learn. And then, you know, from there, just engage with the financial advisor so you can know whether or not the advisor is telling you foolishness or not.
You know, that's a great point, you know, that at the end of the day, of course, we get advice from licensed financial advisors. At the end of the day, we too need to make sure that we get the information and know the information. You know, I think that's wonderful. And I love the encouragement that, you know, we don't need to start from a place of, well, that is maths. And reading financial statement is maths. I mean, was never good at maths in school, you know, that it can be very, very basic information, and again, doing the reading.
Kerry, can I make a short point?
Yeah, man.
So I see somebody in the comments say it, and it's something worth saying. Financial advisors have a fiduciary responsibility to have their clients' best interest at heart. And that's, well, I just put a JMMB plug. But and that's a very important point. Why it's a very important point is you can go to Tom, Jack, and Harry on the road anywhere and ask them something, and they'll say, okay, yeah man, buy that, sell that, etc. When that blows up in your face, you can't go back to that person and say, you told me to do this. A financial advisor has a duty that they sign to give you the best financial advice that they possibly can, right? So there's that other thing, which is why it's very important to have this conversation with your advisor, their supervisor. And somebody said it as well. You can have an advisor as a side piece as well, and have other advisors. So you can have multiple brokerage accounts, be a client of multiple brokers, and have multiple advisors, so you can kind of diversify your information. That's it.
Thanks, Simon. I appreciate that. Boy, this wife and side piece analogy, I think.
It's a good analogy.
No, man, we're good. I think it really communicates what I'm saying. I think people are going to be using the analogy for some time to come. David, what's your take?
Well, Mark and Simon basically hit on a lot of points, and they're really right. If a financial advisor should be guiding you, and as Simon said, you should give me some pointed questions. So even if you aren't an expert or you don't have all information, at least they can guide you in a better way than you just going saying, I want the next start going to give me 100% of whatever amount in X period. A lot of people really and truly forget that even though you're investing, you should have some emergency fund or something to back it up as well. So some advisors, as people have been telling me, have been giving them great advice, you know, guide them through. Some of them even, when they came onto the IPO time, pre-fill out the form for them and just said, come sign. So there are good advice out there, and there are other situations where it's not the best case. But the reality is that even though many of us right here, many of us, but for those new investors out there who are saying that, oh, I hear bad things about the advice and everything else, give it a try. Check out the advice that are there, see what you can actually learn from them, and see what else you can learn from the general space. So remember, you have to say what brokerage account alone. As Simon said, nothing necessarily in finance other than the actual money and wealth is supposed to be taken as the wife. You can get other person's perspectives. So I've only seen a financial advisor in years. I only see my financial advisor to a process the transaction. Otherwise, I don't necessarily see them. For my new colleagues who are just joining the investing movement or starting their journey, I encourage them to see their financial advisor for many reasons, especially when it comes on to building the portfolio. So I will see particular positions and I would say, my friend, hey, something here. They might link the advisor and check it out. And I'm not saying this is advice, I don't give advice, but they might see something, I might see something, and they will check out the advisor and they come out in their advantage. So, like Marc Gayle analogy a while ago about the person using the credit card to save on the rent. Or even earlier, recently, there are some preference shares on the market which are redeeming very soon with a particular advantage that if your financial advisor sees you as someone who likes fixed generated income, especially during these times, then it could be to your favor. And that's why I'm saying that your advisor should have a purpose, a fiduciary duty to help you out and guide you. But you should do your research as well so that even when you're going to go and see them, it should be to your advantage in long-term overall perspective. But still, do your research. There are many resources out there, and you should go to your advisor seeking guidance, but also you should be able to question them and see what they can actually know instead of taking their good advice as the gospel.
Thank you so much, David. I appreciate that. And I again, the balance between, yes, getting your licensed financial advice from a licensed advisor, making sure that you yourself remain informed and educated and doing your research. And again, I love the point, hold them accountable, give them your feedback. If you're dissatisfied, it's a relationship, just like in a marital relationship, any sort of relationship. If it's not working, you may need to do some counseling, you talk it out. If it's not working, then you make another choice. But again, it's really a very, very important relationship dynamic that we continue to encourage and champion. Thank you so much for your candor, gentlemen. I saw a comment, Simon not towing the party lines at all. But we're here to really have the honest conversation. So I'm just gonna just do one final housekeeping matter, and then we're gonna invite our gentlemen to give us one final piece. So don't move, don't go anywhere. Just again, a final housekeeping matter. Just to say, for some of you, this is the first time you're joining a JMMB Goal Getter live stream webinar. So this is our 5th one, by the way, and we've been covering some interesting topics during this time of COVID. But guess what? We're not stopping. We're going to keep going. We're going to be bringing you the topics in these live streams that we believe people want to know and want to hear about. So send us those DMs, tell us the things that you would like to hear more about in these live streams as we bring them to you in the coming weeks and months. Because even when COVID gone, we'll still be here. So don't worry about it. We'd love to hear from you. Next webinar, next live stream, is going to be next week, Tuesday, 8:30, same time, same place, right? YouTube, Twitter and Facebook, JMMB Group on YouTube, JMMB Group Jamaica, Twitter and Facebook. Same time, 8:30 next week, Tuesday. And we're going to shift gears a little bit, right? But as you know, in this time of COVID, so everything has been digital and online and social media for quite some time now. But I think what has really happened in COVID, as we've been monitoring the conversations, is that the digital space has really now taken front and center in a way like never before. So in as much as we know that being on social media and perhaps as a business owner or even as an individual has been critical, now that everybody's kind of on lockdown, in curfew and all these wonderful things all over the world, people are spending so much time on social media, so much time online in the digital space. A lot of people are interested in knowing, how can I build my personal brand in the digital space and monetize it, make money from it? A lot of people are doing it already. And guess what? Your JMMB is going to be hitting that topic. And that's Tuesday coming, right after Easter. Tuesday, 8:30, right here, same time, same place. We're going to be discussing how to build and monetize your personal brand on social media. And we have two awesome guests. You don't want to miss it, because we're going to have Naomi Garrick from Garrick Communications, the PR chick. She is a personal branding specialist, so she's going to be here breaking it down. And our second guest, a lot of you know her and follow her. You're part of her Insta fam or her LinkedIn fam. She is the awesome Terry Carell Reed. She is going to be here as well. So we're going to have two awesome ladies, Naomi Garrick, Terry Carell. They're going to be coming and breaking it down for us, how to build and monetize your personal brand, because a lot of people have to be pivoting these days, and it's a hot topic, and we're happy to be able to have that conversation with you. JMMB, we're standing for the greatness of everybody in every way, shape, or form. So look out for that. Thanks again. Now we're going to go back to our gentlemen and ask them now just to have a final word. I'm going to go to each of them, starting with Marc. Marc, could you just to wrap, could you share with us in summary, what is your personal money management, personal financial management, investment mantra, your philosophy? What is it that drives your decisions in summary?
Yeah, so in summary, it really is independence, I would say, is the biggest thing. And so research and taking bold decisions, while I can, and sacrifice, delay gratification, not buying that additional latte, not throwing in shade at lattes, but buying one less latte and whatever, and then just and investing in my future, so that at one point in the next decade or two, my portfolio can be paying me without me doing anything at all. That's kind of like the goal, right? And so yeah, I think everybody has the ability to learn how to do it. You just have to take the time and just invest in yourself.
Thank you so much, Marc. Take the time. I love that. Taking the time, focusing, and investing in yourself. And, you're worth it, guys, and that's the thing. JMMB, we would have started from a place of helping all Jamaicans to realize their dreams. As I always say, with all due respect to the starting balances at some of the various financial institutions, we believe that everybody can achieve their financial goals with even the smallest starting balance. And so we encourage that. Investing yourself, you're worth it. David, your mantra, your philosophy in summary.
Well, actually, I forgot it to a point, and actually getting back to it now, and make sure that you have a basic level so that even if you fall off, you never break it. And I'm going to explain another part as well, but the reason I'm saying it is that I have some friends who are saying, I can't see every time I want to open this account or whatever. So let me give you a perspective. When I was in high school, that I want to open a US dollar account, they said $100 US. At that time, it was around $13,000 JMD. What did I do? Every month, I started to save at least $1 US, because I didn't want to hit that target, meaning go to the bare minimum. I will try to exceed it to the highest capacity. So as it relates to even going on money management, it comes down to how can I learn to take advantage of opportunities around me, and even utilize different assets, or not even necessarily skills, but financial or property assets or whatever asset you have to generate more income. So even recently, I was talking to somebody, and they were saying that they pledge their stocks, which you can actually do people as collateral for a loan. So instead of them having to take out an unsecured loan, they're able to take out a secure loan using their stocks as collateral and end up paying a low interest rate and taking advantage for their future needs. So as Marc said, financial independence, because no one is saying that you cannot be comfortable, but you don't want to be struggling throughout your journey in life. You want to be able to have at least some peace and be relaxed as to what you're doing. So, if you want to open an account with anything in life, look at what you can set the bare minimum so that you don't try and hit it. You don't hit it at all. Like I said, you know, that's the target for $1, but I'm going to say $5-7 each month, just to make sure that I went over and beyond, just so that within less than a year or two, I could open that account. So, as money management, it's about setting your targets and, ensuring that when you have those targets, you try and make sure you don't even hit the minimum, you go above it.
I love it. Reach for those stars, no matter what you're starting with, no matter how much, just keep at it, keep pressing, Don't settle for the minimum. Just keep hitting those stars. Aim for high. Financial independence is where we're going. I love that. Simon, your final thoughts there.
Yeah, so I mean, and I'll be quick. What I'll say is, remember why you invest. You earn your money. You get up every day at whatever time. You earn your money every day. Be the best steward for that money. Do not tell yourself that I can't learn this or it's too much. Matter of fact, you don't need to know everything, but you need to know at least the basics. Remember your SMART goals. Be specific. Have measurable goals, goals that are realistic, relevant, and goals that have a defined time period. And even within this time of crisis, with the pandemic, a potential recession, etc., remember opportunities exist. Opportunities still exist, and you can go there and find them. Contact your licensed financial advisor. They should be able to help you.
Thank you, Simon. I love that final point. Yes, we believe opportunities still exist. We are in a time of crisis and we are trying our best to navigate through. But the message is not a gloom and doom message. It is, yes, there's still opportunities that we can take advantage of. We need to consult with our licensed advisor to get it and get the advice we need. Do the research, know why we are investing and sticking to those fundamentals. I love those experiences that you would have shared, and I think they are instructive. They can very well be instructive. Thank you so much, gentlemen. Yo, blow up the comments for me, people. Can we have a round of applause for these guys? I mean, these guys are just awesome. They took the time, first of all, out of them nice, peaceful Thursday evening, right on the cusp of Easter here, to spend some time with us. Thank you so much, guys. Yes, there are their Twitter tags. A couple of people had questions about what their Twitter tags were, their handles were on Twitter. But we really appreciate you guys, for taking the time to spend with us here tonight. You could have been doing so many other things. Thank you for being so open and sharing again your own personal experiences and perspectives. Not everybody like to chat them business, as we say in Jamaica, but we appreciate it. And we thank our viewers, our awesome viewers, YouTube. You man see the applause, them coming in, YouTube, Twitter, Facebook. Thank you guys. Yes, this is recorded. So if you joined late, it's going to be recorded. We're going to upload it. You're going to get it back on YouTube, Facebook, Twitter, and on Instagram. So you can watch the recording. Whoever miss it, sit down, watch it with your family, watch it with your friends, watch it with your colleagues. So ladies and gentlemen, all, thanks again to our guests, Simon, David, and Mark. Thank you very much to our viewers, to my marketing crew, all my marketing crew in the background on the platform, working the platform, following up, keeping me in check. Thank you, ladies. It's such a blessing to be part of a team that continues to work hard under these circumstances to bring you guys the information that you need. We really appreciate you. See you Tuesday, 8:30, building and monetizing your personal brand online in the digital space. Yes, stay inside, turn on your yard, be safe. We wish you all the best. JMMB continuing to partner with you. Thanks, everybody. Stay safe. Have a great weekend. All the best. Bye, guys.
All right.